Hi, this is Brian Resney, President of Resney Wealth Management. I'm bringing you an important update about earnings season, the U.S. economy, and more importantly, how to protect your wealth. We've been getting literally dozens of phone calls and emails from our listeners about, Brian, do you expect another recession to come around? We're hearing a lot of gloom and doom. We're hearing the dollar falling, the dollar demise. But what about precious metals, oil, and so forth? The first thing that I want to bring up is I want to talk about your investment strategy. If you do not have an investment strategy, and that investment strategy needs to be in writing. If it's not in writing, you really don't have any investment strategy at all. Think about it. You're flying by the seat of your pants, or the person you're working with obviously is doing the exact same thing, or probably just acting as a broker. With part of an investment strategy is a disciplined buy strategy and a more important disciplined sell strategy. When do you actually sell any investment, either for a profit or to mitigate losses? When do you reduce risk in your portfolio? Both components are equally important, but in my opinion, you need to make sure that it's in writing, and in risk management is going to be more important than ever. As we go into earnings season, and this is where you have to really drill down and understand where good research really comes into play. If I look at the U.S. primarily, and I look at large cap companies, and I'm going to pick on one in particular company. When you look at earnings, you cannot look at them at face value. You have to really dig under and lift the hood up and know where those earnings came from. One particular company that I talked about on my show on Sunday was Whirlpool. Whirlpool showed blowout earnings. If you looked at on the surface, it showed that they actually increased earnings 87%, which is huge. But if you really take away some tax benefits they receive from the government, most of their earnings growth actually came from the government on free budget money that the government's trying to reinflate the economy. Now, a lot of those tax breaks are going to be gone or curtailed as we get further into this year, in my opinion. And what's going to happen to a company like Whirlpool? I think you've seen the golden days, and the golden days are over. Bottom line is, if you can't sell more product, and by the way, their sales only grew 3%, so it's pretty impossible to grow your earnings 87% when your revenues themselves or your sales only grew 3%. The majority of their earnings came from tax benefits from energy tax credits that the government's trying to push out and put in their short-term budget plan in order to reinflate the economy to essentially get people to spend money. When that's gone, at the end of the day, if you don't have a company that actually can sell more and actually produce bottom line earnings growth without all these hokey-pokey giveaways from the government, earnings tax credits, or any fancy accounting method, you really don't have a solid company. I think Whirlpool is one of those companies, as I made a comment on my show. If I owned it, I would definitely sell it at this point. I think it's grossly overvalued. And if I look at the latter part of this year, as we get into the end of the third quarter and fourth quarter this year, the comparisons are going to get quite tough. That's where the rubber's going to hit the road. That's where I'm going to be the most pessimistic and the most concerned. We are watching our market trend indicators closely. You need to make sure that you also have in place your risk management and when you plan on selling any asset category or repositioning into relatively stronger asset categories throughout the world economy. Again, take earnings, don't take them at face value, take them with a grain of salt. You need to make sure you understand, if you buy individual companies or you look at the earnings of general companies or a sector in the U.S. economy or the world economy, where are those earnings really coming from? Is it really from revenue growth or sales growth in combination of running a company fiscally responsible and actually making more money? Or is it coming from basic tax loopholes or temporary tax benefits from the government? If it is, that is a warning sign, and you need to really understand that. So when I look at companies like Intel, which to me really didn't do a great job, when I look at Microsoft, again, I talked about companies like that. When I look at Bank of America, again, these are all suspect companies that I would put on the chopping block and I would be selling immediately. So again, if you own some of these companies, do your own research, but at the end of the day, if you own any investment, individual stock, it requires a lot of detailed maintenance and research. And if you're looking at your overall portfolio, again, a detailed investment strategy in writing. If it's not in writing, there's no strategy at all. And again, one of the most important parts of money management is knowing when to sell or risk management within your portfolio. I hope this update video was helpful. As always, if we can help you manage your portfolio, if you'd like to talk to us about managing your wealth, call our office. We'd be more than happy to talk to you and build your portfolio in a manner that's prudent for you. Again, until this Sunday show, have yourself an extremely profitable week.